conversation is Finance with Muktar Muhammed. He joins us on the show this morning. Good morning and thanks for being here.
Thank you for having me.
It's a pleasure to have you on the show.
Thank you for having me.
And you know, just before we started the conversation and we were talking, I was speaking about the fact that how much tomato is now and how we used to be before. And you were telling me that, you know, we cannot compare the prices. It's a bit lower than it used to be. But we're hearing 18.02%, percent. It seems like a good figure, but people are still not excited. Because people are saying that these prices are still relatively high compared to what it used to be before. The layman on the streets, the market women, when you tell them inflation, they're like, it's not even reflected because we're still buying these things a bit higher. But you economists will argue that it's a bit higher, but it's not like how it used to be before. When do we get to the point that everybody will now agree that, okay, I'm buying a bag of tomato for, let me say 15,000 naira. Let me just put it at that.
Well, I think we will not be doing ourselves a lot of justice to the government or to the management, the economic management team, if we say that things are what it used to be some months ago. Yes, it might not be where they met it, but it's not where we were going to before now. Yeah. So I think there's been a little bit change in terms of what we're seeing now is the difference, the coming down is not so drastic. That's the truth. But you could see that that instability, that volatility, that you buy something in the morning, you go there in the afternoon, the price has changed, has relatively not, it's not like that again. Like you said in the report, they said price of goods are coming down slowly. Not that they are coming down drastically. So we must understand, and if you look at the inflationary pressure, we're talking month to month, it's about 0.7. Month to month, so it's very slim. But when you talk about year, then you see the difference. Remember, by this time last year, inflation was about 37%. So if you compare it to where it's year to year, it's better. Now, you say, how did we get here? Is inflation really that low? Don't forget that why we got to where we are today was because of rebasing. Now, rebasing is that we have seen a new area in our economy where people can invest and create jobs. By virtue of that rebasing, it brought down our inflation. One, like I said on your program before, rebasing will not automatically lead to low price of goods and services. Rebasing will lead to new employability of Nigerians because that new area that has opened up, new companies will come, create more jobs, and then employ Nigerians. And then you have discretionary income now to spend on commodities. And then once you have that income to spend on commodities, that means your income has slightly gone up because you now have a job from not having a job. And then you can buy those commodities. Now, what we have seen today, we are enjoying, is all the monetary policy tools. What I mean, monetary policy to bring down exchange rate. You know, I've said it before, and I think I stand happily to say that. I've said it when the CBA was cutting rate. I said it on your program. I said it over a year. I said rate cut is not the challenge to Nigerian inflationary pressure. Our current inflationary pressure was largely driven at that time by exchange rate volatility. I remember saying, government, take a cut off your tariff or stabilize the exchange rates. As long as exchange rate was very volatile, we were not going to get to a steady inflationary figure. And then look at it. At that time, I was saying exchange rate was about 1,700, 1,800. At the point, it got to 1,900. But today, you can say between official, about 1,700 and 1,475 officially. Parallel market, 1,500. You can see with that differential, that is what you are beginning to see in terms of easing down of inflation. And all this started when exchange rate was stable. Today, we will not be crying that, oh, you are not sure what the exchange rate. People are not no more holding the exchange, the dollar again. The dollar is all over. You go to the bank, you want to withdraw. Before then, say, oh, you cannot withdraw. But now, and to make it even better, you cannot pay or do international transaction with your Naira card. That tells you liquidity have improved in the dollar side. And that is why you are seeing that stability. Yes, Nigeria will say, oh, we are not seeing it. But let me tell you, when you are doing a reform, first of all, reform is to say we are changing our way of life. Change is painful. Then, who are going to benefit from the reform? First, investors. People that are ready to invest into that reform, people that have been investing in that reform even when it was not there, they will benefit. That's why you see today investors in the Nigerian stock exchange, fixed income space, Eurobond, capital market, are the one enjoying. Secondly, businesses. Now, what type of business? That's why our challenge is the bigger business. By this time last year, most of these businesses were in red. Billions in terms of losses because of what? Fluctuation of the exchange rate. Then the exchange rate has stabilized. If you go to some of those businesses, the bigger companies, you realize that they have come out of that and they are not declaring profits. That tells you business. Now, the challenge is that there's a disconnect. And that disconnect is with the informal sector, which is the key driver of the Nigerian economy. The market woman, the Okada rider, the guy with the barbing salon, the hairdresser, those are the disconnects. And those disconnects cannot be fixed by the monetary policy. It can only be fixed by the physical side, which is the federal government, the state government, and the local government. What is the state government, what is the federal government doing, what is the local government doing, and what is the state government doing? They are the ones that are with the informal sector, and they are the ones that benefit more. Because if you look at the informal sector is not driven by taxes. It's driven by levies. They pay levies to state government or to local government.
Yes, that's true.
So they are not. So once that, if they are not feeling that impact when you go to the market, because everything is same of same. High cost of transportation, bad road network within those vicinity of those market women. Levies are still coming up. Illegal levies, official levies. So definitely they'll price that into the life of the consumer.
Of their commodities. Now, the way you have explained this thing now, I have a better understanding of how it works, you know, from here, there. No wonder somebody was saying, these policies are quite elitist. When will it get down to the average Nigerian? But it's better, it's elitist, and then it gets down eventually than nothing at all happening. How would it have affected the inflation rate and the economy if our governors, I don't want to say subnational, let me not confuse some people, it's if our governors were doing better about a lot of things, about investments, about people-oriented policies and things like, how would it have affected our inflation?
You would have seen the bigger impact than what we are seeing now. Now you talk about governors, you realize that they've earned more than what they used to earn before.
Yes.
They will tell you, oh, the time we're earning that exchange rate was 750. But you can always tell